In Investing 101, how do you invest? How do you take advantage of a low interest rate environment? Let's break it down. We're going to bring in our guest, John Bever. He is a certified financial planner and president of Phase 3 Advisory Services Limited. Let's talk about where you see interest rates going.
But right now the pressure is downward, and we see this in several areas. The markets are telling us downward in rates. Even the Fed is telling us downward in rates in the short term. However, long term, we do expect rates to increase as inflation comes back. The Fed has been attempting to create inflation. They've had success getting us through the financial crisis and not going into a true deflationary environment, but now they're having a hard time stoking inflation given what's going on in the rest of the world.
We hear a lot about the inverted yield curve. It doesn't necessarily mean recession is ahead, does it? It has shown that in the past, but not always.
So this is what's interesting. Every recession has been preceded by an inverted yield curve, but not every yield curve has predicted a recession.
Inverted
so there are
yield
some,
curve.
exactly, so there are some false signals that occur with this. But right now we are inverted, not by very much. Inverted in May, just in mid-June here, the 10-year Treasury bond did drop below 2%, but hasn't gone down to its ultimate low around 1.3%. So we're still in this environment of creating a bottom in interest rates.
I like to learn when I do these interviews, and I have certainly learned something, John, about an organization that I had never heard of before, very influential on Wall Street, TBAC. What is this group, and what do they have to do with this whole low interest rate environment?
Well, most people have heard of the Federal Reserve Board and the Federal Reserve Bank. They set short-term interest rates. But the TBAC, the Treasury Borrowing Advisory Committee, is a group of 17 members made up of major Wall Street and influential Wall Street firms. And what they do is they advise the Treasury on their borrowing. They advise the Treasury on good policy for financing the debt and the long-term deficit that continues to build over time. So what they do is to give them ideas, give cautionary statements. For example, when the administration suggested that perhaps we should use a 100-year Treasury bond, the TBAC suggested that they not do that.
And we don't have one, do we?
We do not have one.
It sounds like they have a vested interest in what they are telling Treasury to me.
There is some vested interest here, and there could be some conflicts of interest because these firms also manage bond portfolios. But it can also give us a clue. If we look at what those firms are doing with their bond portfolios, it might give us a little bit of clue of what they were suggesting or what was mentioned in the meetings. But the meetings are private. They are closed. In fact, mobile devices are collected before each meeting.
I got it. Speaking of managing bond portfolios, what are you doing with your clients fixed income wise in this low interest rate environment? Maybe some of your older clients are saying, I need yield, but they're not getting it now.
Yield is a challenge in this environment. We are encouraged by the fact that there will probably be an increase in interest rates going forward. So right now we're not interested in locking in very long-term interest rates. We're also reaching a little bit, looking at the credit quality. The third thing is there are other alternative investments that can work. For example, real estate investment trusts have the potential of paying a higher income, although with much more risk.
John, very good. We got to leave it at that. Thank you very much.
For more Business First AM, check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.